Hi guys, welcome back to the channel. So today we're here to talk about the Airbnb gold rush. Basically, that's what it is. This is about how Trump's big beautiful bill. I hate that name. But anyway, this is about how this bill created the ultimate tax loophole. Now, think about this. You buy a property, you rent it out on Airbnb. Not only that you get to make money from your guests that be staying in your property, but you also can write off massive, and I mean massive losses against your regular income. Now, the problem is I think a lot of people that just work a regular job, let's say, whatever, whether you're a doctor, lawyer, or you work at the office, the problem is that you don't have anything to write off, right? The way this tax bill, and not just this particular part of this bill, just taxes, period. The way these taxes are written is basically for you to write something off so you can offset your taxes. If you're just going to work 9 to 5 and you just collect the paycheck, you're paying the bulk of the taxes. And some of you may say, well, why does Congress approve something like this? Why would they let something like this go? Understand, a lot of these people in Congress, your favorite congressman or your congresswoman, they own properties too. They're landlords. Okay, they're the ones that approved this bill to also benefit them. So I say, why not take advantage of it? I mean, the tax bill is out there. If you can figure out a way to maximize your taxable incomes, meaning not paying taxes like everybody else, I think you should be able to do that, and I think you should look into doing that. Okay, now what actually sounds too good to be true? Well, it's real. Congress just passed this in this big, beautiful bill that was just signed this year on July 4th. Yeah. No irony there. July 4th, 2025. Now, what's happening here is that this Trump's new law brings back 100%, okay, 100% bonus depreciation permanently. There's no phase out. It doesn't go away. This is permanent, okay? You can write off 100% depreciation permanently for properties acquired after January 19th of 2025, January 19th of this year, okay? This means that you can immediately write off the full cost of qualifying assets in your first year instead of spreading it out over decades. What does that mean? Here, when you buy a property, okay, every year, there's this thing called, you could depreciate the property. So everyone does it. If you own a property, your tax accountant, whatever it is, they know. So there's a certain value to that, right? There's a certain dollar amount. So every year you depreciate your property to a certain increment, just a little bit, repairs or the roof or your boiler, whatever it is, that's a dollar amount to it. And they depreciate that every year. Now, what this bill is saying is instead of you doing that every single year, depreciate a little at a time, this one here, you can just depreciate everything at once. Now, it's not money. They're not actually giving you, they're not just giving you money, but it also decreases your tax liability. You're paying less taxes. You're not paying any taxes. So instead of depreciating your losses over the years, you could just do it all in one shot and get your lump sum of money right now, which would mean a big tax break, basically is what that means. Okay, so when you combine that, right, with what experts are calling the short-term rental loophole, you've got a recipe for some serious tax savings. So with some people, if you do this properly, you could basically live in tax-free. A lot of people complain the rich, rich people don't pay taxes, this, and that. But this is the opportunity for us regular folks, regular people, to actually take advantage of this tax loophole. And this is the perfect opportunity to do so. If you can do that, if you can afford to do so, this is once in a lifetime opportunity. Okay. Now, here's how this works. Okay, so normally rental income is considered passive, right? Because they're like, hey, you're not doing anything for this. You're just sitting on your ass. You're making money. So this is passive income, which means that any losses, it cannot be used to offset your W-2 or your business income because you're like, it's this passive income. Now, but short-term rentals now, this is where it gets interesting. Short-term rentals get special treatment, meaning if you just start an Airbnb, this is why it's going to be big. It's going to be Airbnb, it's going to be very lucrative for people to start one of those things. In New York City, if you're in New York, whether it is you're renting a room in your 2-bedroom apartment, the whole rule thing. I did a whole video on that. You guys can look that up. No more than 2 people, all that nonsense. But this is how this is going to work. So you have to meet 2 requirements, just 2 simple requirements. One is called the 7-day rule. Your average guest must stay 7 days or less, right? And then what they call also material participation, meaning that you need to actively manage the property. Think of at least 100 hours a year, all right? And you have to be more involved. You have to be 100 hours per year, and it has to be more than anyone else involved. So if you have somebody else, I don't know, cleaning or managing your property, you have to be involved more than them. Okay. Now, so this is how this is going to go. So let's just say you buy a property for $500,000, right? You buy a $500,000 property and you just put 15 to 20% down. Now, through something called cost segregation study. This is specifically for short-term rentals. You can identify assets like appliances, furniture, flooring, HVAC systems, just normal things that comes with a property. And those things can be depreciated faster, right? Because you're using them, like flooring, right? The flooring, people are walking on it, appliances, fridge, HVACs, I don't know, air conditioning, you name it, whatever it is, that stoves, right? You can depreciate those immediately right away, okay? Now, with this new 100% bonus depreciation, you can write off, if you buy a property for $500,000, right? You put, let's say 20% down, what is that, $100,000? You can write off $150,000 to $200,000 losses in your very first year. So whatever tax you paid to buy this property, whatever, you can write all that off immediately, okay? Now, here's where it gets really interesting, okay? Because Airbnb meets the short-term rental criteria, okay? These losses are not trapped as passive. They become active business losses. You can slash your regular income taxes, okay? So let's say you're a high-earning person. I don't know. Let's say you're a surgeon or somebody who's making, I don't know, 600 or whatever, less than $500,000, I believe. And you're making, let's say, I don't know, $300,000-$400,000 a year, right? You're a doctor, a lawyer, making decent cash, decent money, okay? This law, right? Because if you're making this kind of money, you're paying a lot of taxes, especially if you have nothing to write off. You're more likely paying the bulk of the taxes, okay? And because you have nothing to write off in your W-2. Now, with this thing right here, you can potentially wipe out a significant portion of your tax bill. You could almost basically live tax-free. This is crazy. So right now is the golden age, right? Right now is the golden time to buy it, okay? Because several factors are converging to make this strategy particularly powerful, okay? This is a permanent, I repeat, this is a permanent 100% bonus depreciation. Unlike previous versions that were set to phase out, Trump's law makes this permanent for property acquired after January 2029, okay? Not only that, there's more. There's also an increase of Section 179 limits, all right? And so what is that? So Section 719, it says that you can immediately deduct up to $2.5 billion in business purchases in 1 year, and that was $1.2 million a year before. Also, higher SALT deduction. For taxpayers earning less than $500,000, the state and local tax deductions cap increase from $10,000, especially if you live in New York and those places, man, that was kind of ridiculous. That the max you can write off is $10,000. Well, then that's been increased from $10,000 to now $40,000 through 2030. Basically, as long as Trump is in office, this stands. I guess when he leaves, it goes back to $10,000. Again, SALT taxes, okay? Savvy investors are already, the guys, the savvy guys, all right, they're already setting up shop, all right, they already figuring out a way to strategize this, and they figuring out a way how to leverage this, okay? So what you're going to want to do is you want to buy with leverage, okay? You put 15 to 20% down, finance the rest, get a cost segregation study, identify assets that qualify for immediate write-offs, maximize furnishing, and improvements. Okay, everything. I don't know, hot tub, home theaters. All these things can be written off immediately. Okay, document your hours. Now, this is where it gets a little interesting and tricky because the IRS particularly goes after people. They little you're more likely to get audited in something like this, right? So that's why you have to be particular. You have to be very particular and very meticulous with your record keeping. All right, because the IRS love to audit people. That's oh yeah, I spend I don't know 20 hours over there. And they're like, oh yeah, really? Let me see those hours, right? So just say, hey, on Tuesday, on this day, I spend X amount, whatever it is. You have to keep a ledger, and keep record of all the hours that you spend there and what you're doing and so on and so forth. All right. So I would also recommend you guys talk to your tax accountant or talk to your tax professional. Right. This is not tax advice. I would recommend you speak to a professional. All right. Also, make sure also too you have to make sure that the property meet the 7-day average, right? Structure your bookings to maintain that short-term rental status, right? Because your guest has to stay there for an average of 7 days or less. So make sure you stay on top of that. Okay. Now, of course, like everything else that comes from Donald Trump, it does not come without its controversies and its problems. Okay. Now, people argue that this creates an unfair advantage for wealthy property owners who can afford to buy real estate investments. The CBO, which is the Congressional Budget Office, estimate the overall tax bill will cost $3.4 trillion over a decade, a 10-year period. Meanwhile, this law, this bill here that people are going to be taking advantage of Airbnb and business strategies and so on and so forth. I'm not a big fan of this. I think this is not a good, this doesn't look good. But however, this law cuts about almost, $1 trillion, $930 billion from Medicaid. All right. And it could strip health coverage for 17 million Americans. So I see the controversy. I understand it. All right. But the bill's passed. Congress voted for this. I mean, this is the law. All right. So I'd say if you can't beat them, join them. Okay. Now, however, for those who can take advantage of it, the opportunity is undeniable. As one tax expert put it, there's never been a better time to start an Airbnb business if you're a high income earner looking for tax relief. And I agree. Right. But the bottom line is Trump's big, beautiful bill has essentially created a legal way for Airbnb investors to generate paper losses while maintaining positive cash flow. This is what it's about, guys. Positive cash flow. I'm all about cash flowing. I don't care about how much the property's worth, property value, all that stuff, man. Show me the money, baby. I want a cash flow now. I want the money now. Okay. By combining this permanent 100% bonus depreciation with the short-term rental loophole, property owners can potentially offset substantial amount of their regular income, right? And this is what you want to do, guys. These Congress people, congressmen, your senators, whatever it is, these are property owners, okay? And they've been taking advantage of this specific tax loophole for years, for decades. Meanwhile, they talk all the nonsense. But this right here is an opportunity for people, for regular people, especially if you're a high earner, you're working and you make good money, you're paying the bulk of the taxes. This is an opportunity for you to write off. Okay, this is a perfect opportunity for you to get a massive tax break, and I think on the grand scheme of things, that's a good thing. Okay, now this strategy here is not without its complexity. You need to talk to a professional tax guidance. You go talk to your accountant, to get some proper guidance on this. Okay, I'm not giving you financial advice, but I would recommend you go ahead and talk to a tax an accountant about this. Okay. Also, you need proper documentation. Like I said earlier, make sure your paperwork is tight, right? Make sure you got your hours. Make sure you have the dates and when you went there, how much time you spent there, what did you do, and so on and so forth. Your accountant is going to help you with that, all right? Because they're going to have to basically structure this thing a certain way to make this work, all right? But, however, if you can navigate through all of that. Those are willing to do that. Okay. This new law has just opened up what might be the most lucrative real estate tax strategy in decades. I don't think people really grasp and comprehend how much of a big deal this is. Okay. Now, whether you see this as a small tax policy that incentivizes investments or a loophole that benefits the wealthy at everyone else's expense, likely depends on which side of the equation that you're on. But one thing is clear: the Airbnb gold rush is officially underway, and it's here. And I want you guys to take advantage of it. Well, guys, also too, what I'm gonna do also at the end of this video, what I'm gonna put in the description. I'll put the link for the actual law if you guys want to go ahead and read on that, and I also put another link. This is kind of like to give you guys the key points, the bullet points, and highlight, the main savings of this bill, and basically how to go about structuring your businesses and so on and so forth. So I'll put that in the description below. That is going to be it for today, guys. If you guys find value in this video, please like, share, and subscribe to this channel. And thank you very much. And I will see you soon.